Welcome back to Money with Mission podcast hosted by me, Dr. Felecia Froe, urologist turned real estate investor, passive income enthusiast. Vision is every woman should have the financial ability to walk away from any job or relationship that is not in her best interest. Today we have someone who shares that entire vision of us all being able to put our money to work in ways that will enhance our legacies, enhance our lives. Cintia Mano. Cintia is the CEO of COREangels, a community of angels dedicated to helping professionals and entrepreneurs start investing in the startup ecosystem as an angel. COREangels provides curated deal flow and resources and actionable guidance specifically tailored for individuals seeking to diversify their investment portfolios and navigate the dynamic landscape of startup investments. Cintia's journey began in corporate leadership, but after founding a startup, she started mentoring entrepreneurs and investing in startups. Her passion for empowering professionals to embrace angel investing led her to establish successful angel funds with a strong focus on collective intelligence and curated deal flow. She's committed to demystifying the transition from corporate careers to startup impact. Cintia is dedicated to sharing her insights and expertise to guide others in making purposeful and successful investments in the startup ecosystem. Through the CORE framework, she aims to provide valuable resources and support to professionals seeking to make a meaningful impact through angel investing. You guys, I think you're going to enjoy this conversation. It's about something we don't usually talk about. We're not talking passive income here, also making a big difference in the way we are putting our money out to work. So enjoy this show. If you haven't hit subscribe, please help us build this community, help us build everything we're doing with Money with Mission, getting everyone's money out to work to build a better world. If you haven't subscribed to our YouTube channel, please go there and do that. Subscribe to the podcast. I appreciate it all. Thank you so much. Enjoy the conversation.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Hey guys, welcome back to Money with Mission. I am super excited to have Cintia Mano with us today from COREangels. You heard about her background. Now we're going to get into this conversation. We've been talking a little bit off screen, so I'm even more excited now to have her on the show. Thank you, Cintia, so much for coming to us from Portugal. What time is it over there right now?
Right now, it's 4:11. I thank you so much, Felecia, for being here, for having me. Such a nice opportunity. And I think there is a lot in common. We have a lot in common with our activities and our purpose also. So I'm really excited to be here with you.
I am excited too. So I talked a little bit about where you came from and what you're doing with COREangels. Tell me, I want us to start with everybody with your money story. Were you born into money? Were you born poor? Did your family teach you about money? How did you get to where you are learning about investing? Because so many of us don't know that much about investing. It's just what our government teaches us. So how did you get to where you are today?
Yeah, great. In fact, I was born in Rio de Janeiro in Brazil, in a family that my parents, they could give me some opportunities, but we were not rich. Okay, so I could have privilege of studying private schools, of accessing a very good public university and this sort of thing. But money in my family was not, I was taught about money in a very conservative way. So things like spend much less than you make, have your savings, don't create debt for you, avoid credit cards, debts, banks, and this sort of thing. So this kind of knowledge my parents, they taught me. So, and this is already it's a very good thing. But learning about money and how the capitalism works and how everything related to taxes and investments and this sort of thing, I had to know by myself. So I have to look for this kind of knowledge and learn about it alone and together with my husband also. So this is something that I try to correct teaching my kids also about this, about the importance of not only counting on the money that you're making from your work, but also understanding how money works and what is the role of money in your life. Of course, that not being obsessed by it, but putting it in the right place and understanding that money is a mean for amazing things in life. So you should work smart to get it and to make the most of it.
Put it to work for you rather than you
Exactly.
continuing to work for it. I agree.
Exactly.
I agree. So you started in corporate and then you started give me your story as far as your business life too. Let's go
Sure.
there.
Yeah, I studied computer science and I worked as a developer for some time. By that time, it was a long time ago. We didn't even call it a developer, but I was programming, okay? And then I did my MBA. I started working for a consulting company, very famous by that time. So started working in some corporate roles, big companies, multinationals, etc. And I stayed in this career for 15 years. And following the lessons that my parents taught me, I saved very good money out of these jobs. So I was very disciplined in terms of costs, spendings, etc. And then I decided to leave this corporate world to co-found a startup. Okay.
So this was in Brazil?
This was in
When you were
Brazil.
living in
Yes.
Brazil?
This was
Okay.
in Brazil. Yes.
Okay.
By that time, I was working for a global mining company. I had a very good position in the company, a title, benefits, bonuses, all the stuff.
Yeah.
But I was very tired of the corporate type of work and dynamics. I am a person that I have always valued my personal life also. By the time I already had my 2 kids and I was looking in fact, I had decided to stop for a while and take 1 year off, a sabbatical year, and figure out, talk to
Okay.
people, understand what was going on, thinking of taking a different step in my
Okay.
career. By that time, I had also learned how to invest my money in some sort of assets like real estate, like stock market. So when I made the decision of co-founding a startup, I realized that, well, I have my savings, but I'm investing in something that is very high risk. Okay.
Yeah.
I don't know how the company will go. So I need to be smart in investing my money and allocating my money in different kinds of assets to protect my wealth and my family's wealth. Okay. So this is how I thought. So I started in parallel, I started also getting smarter and learning more about investments. So I decided to co-found this startup. It was a big change in my career and a big change in my personal life also. And then after some time in this company, I started mentoring other startups. I got to know many other founders. And because of my corporate experience, I could help them in some of their challenges, especially the founders that were developing technologies for big companies. And they didn't know exactly how to approach them, how the processes inside a big company, how they work. So this sort of thing.
Let me ask you, so you had your corporate career, you were driving down the lane of I've got my job, I've got my
Yeah.
benefits, I'm doing all these things, and I'm not happy.
Yeah.
This is not the life I thought I was gonna do. I'm speaking my own words. This is
Yeah.
not the life I thought I was gonna live, and don't like it anymore. And you
Yeah.
had saved enough and you were in a financial position enough that you could take a year off to just think, to
Yeah,
just
exactly.
be for a little bit. And in
That's
that
it.
year is when you decided or the opportunity came to co-found this company?
The opportunity came before I started the year. So I didn't take the year.
You never
But in the end, yeah, I never took the year. I've been thinking I'm going to be 50 years old next year. And I was thinking maybe there will come a time that I'll take the year because I didn't take it until now. But yeah, you're right. In fact, I decided to take this year off and the opportunity came. But the crazy thing is that I was having sort of the life that I dreamed about, but I thought that this life would be more fulfilling than it was actually for me.
Relate.
Because
Yes.
we have an entire society selling something to us, but in the end, you are looking at it, you are aiming at that life. But when you're living it, that the cost of living that life is too high. The emotional cost, the stress, even the financial cost, because if you are an executive in a corporate world, you are spending a lot of money in things that you just realize when you leave, like things like clothing, makeup, treatments, other stuff that I don't do it anymore, So
Your therapist to help you with the stress that you're dealing with from the.
exactly. So you have many, many other costs that you
Yes.
don't see. And
Yes.
I've talked to many other people who made this movement, and they told me similar stories. I had a cutoff in my budget by 1/3 just for things that I had to spend because I was in such a type of work. So this is one thing. So being more, what is the cost of not being present with your family? What is the cost of not exercising, of not having a proper meal? Or there are many associated costs that be just invisible costs.
Yes. Yes.
So in fact, what happened was that I was waiting for a board meeting in this company, and the meeting was canceled. And I had 2 hours that it was booked in my agenda. And so I had 2 hours free.
Yeah.
And then I locked myself in a meeting room, and I started thinking, I've been exhausted for a long time.
Mm.
And then I started thinking, what is my actual time sheet for the week? Oh, it's like this. What would I like this to be? What is the life that I wanted to live? So in what dimensions or in what topics I would like to spend more time that I'm not spending now. And I started to draw it, to plan it. And the first exercise, I thought, no, Cintia, you're being too shy. Think from scratch. If you could if you didn't have any issues with money, if you could have all the money that you need to pay your bills and live comfortably, what would you do? Then I started scratching some things, and I said, yeah, the problem is not this company. The problem is not this position that I am right now. The problem is the type of work that I have, the type of job that I have, that is very big company, a lot of commitments and impacting my personal life, impacting not aligned to the way I see things. So I decided I have to change it drastically. So this is why I decided, but I wasn't sure about what would be the next step. So this is why I decided to have this 1 year off, But then this opportunity came, and then I decided it was a very good opportunity. And I had always this thing in my mind, what it would be like if I was an entrepreneur. Do I have any skills for that? Is it something that I could do? So I decided to take the chance and, well, let's see what happens and let's go for it. So this is how I made this decision.
I love it. Okay. This was so good. You made the decision. You took 2 hours. You had 2 hours of found time when a meeting got canceled. And you decided to think, not go back to work and catch up on something else. Let me just sit in my time. What would I like my life to be? And not just in the confinement of what I have now, but if I could have everything I wanted, what would I want that life to look like? All right, I'm going for that. And I'm going to take a year off to figure out what that's going to be like. And from having thought that, then this other opportunity came up that you were open to already before you could get into your year off.
Yeah. But you know what? I think, Felecia, that there are some things in life. There are some things that happen to you, not because, or some decisions or some choices that you make, not because of that particular choice, but just to prepare you for another step.
Yes.
So I think that if I didn't think about this, taking a year off, I wouldn't take this opportunity.
You wouldn't have seen it.
Because I wouldn't have seen it.
Exactly.
And I would be valuing so much my previous life that I would say, no, but how come I'm going to leave this corporate job and with all the benefits and stability and all? Because by that time, I already know how to climb the corporate ladder. I already know how the game needs to be played. So I was somehow comfortable. If not in that company, it would be in another company. But I know how things work. So I think that if I didn't take the chance, or if that meeting was not canceled, maybe I would be still there or working for a similar thing. But because of that, I was prepared to see the opportunity and to take it and decide to just change my life.
I'm super excited about that. And so then you walked into this new opportunity, uncomfortable, I'm sure, not knowing if is this going to work? What the heck? Am I going to fall on my face? Am I going to look stupid? But I'm going for it right here.
And that's it. And very uncomfortable. And by that time, it was 12 years ago. So by that time, startups were not even a word, I guess. It was starting, but less in Brazil by that time. And I was a corporate person. So I had assistants, I had contracts already signed and suppliers in place to serve me in whatever need I needed,
Yeah.
whatever thing I needed. So becoming an entrepreneur was a huge change because all of a sudden you start dealing with everything from accounting to marketing to everything. So it was crazy, but I love this learning opportunity. So it was very exciting as well.
Was a co-founder with you somebody you knew already, or was it somebody you
Yes.
met in the? Okay.
Yeah, somebody I knew already, and the previous co-founder was so technical as he was, so they decided that they needed someone from the market, from planning, from
Uh-huh.
financial perspective, so they could be concentrated in the technology part, and I could be developing the market needs, the commercial side, etc.
Okay. Okay. Got it. So you started in this company, and as you were doing that, you were meeting other entrepreneurs, other people doing startups, and
Yeah,
we're seeing that they were struggling with their
with
business, their
many
marketing, their
aspects.
development.
Yes. Yes. But and most of all, I started participating in some mentorship programs from incubators, accelerators, trying to support these founders. But one thing that got me was that many of them, they had amazing teams and they were working for very relevant markets, but they were lacking money. And it was not like millions and millions of dollars.
Mhm.
Sometimes it was few money, short money, just to spend 1 year or 18 months that they could have some peace of mind to
Yeah.
work and develop what they had to. Because if you don't have this early stage money, this very beginning money, you are in a hurry all the time. So you need to develop things faster. You need to sell at whatever price because you need to make revenue. You need to
Yes.
pay your bills.
Yes. Yes.
So I saw that the reality in the early stage was very hard for those startups because sometimes they just needed some money and they could not find it because usually the typical venture capital funds, they are focused in later stages companies that are raising like 5, 10, $20 million and they already have some revenue. So they
Okay.
are not that risky.
Yeah.
So this is how I understood how the founders were struggling with it.
Okay. Okay. So you guys, name of your company is COREangels.
Exactly.
Okay. And so we're talking about startup investing. And I know many people probably heard of startups and they've heard of investing, and it sounds really risky. And why would I put my money there? But let's go to, and actually, I don't know if people think about that, but the venture capital companies are the ones that you just talked about are putting most of the money in, and they're the people in those are making tons of money when they IPO and that kind of stuff. So with angel investing, let's first define what an angel is when it comes to
Okay.
investing.
Perfect. An angel is someone that invests in a startup, in an early stage company. So it's a company that right now is small, but has a very good potential of growing, of scaling. And this person is investing in exchange to, you can have different instruments, but in the end, you're getting some participation in the company, small participation. So an angel is never controlling the company. We are just investing small shares. And the reason why we are investing is because we believe that first, there is a very good potential in the company. So we expect some good financial returns. But second also is that we believe that somehow we can help this company grow. So it's very common that angels, they start by investing in companies that they know very much about that industry because they
Okay.
feel comfortable about the industry and they feel like they can give some advice to the founders or they can bring some connections to the founders. So they can
Okay.
introduce potential customers or they can introduce potential partners or this sort of thing. So in the end, an angel is someone that is investing money. So because of that, they expect good potential returns, but they know this is a risky asset. And why this is a risky asset? Because it's a startup. So it's still a small company that has a good potential, but potential is something that can happen or not
Yeah.
in the end of the
Yes.
day, right?
Yes.
And there is an interesting story that the angels, this name of angel, this concept of angel started in Broadway.
Okay.
And the Broadway, there are some people that they were not donating money, but they were financing some of the plays.
Okay.
And in exchange of that, they would be invited for every session. They could be participating in that venture,
Okay.
not as executive, but giving some advice, bringing other guests to watch the play and this sort of thing. So this is a concept that was originated in the theater, which is very interesting, but then it
Yes.
came to business as well. Yeah.
Yes. Very interesting. So, okay, an angel investor is someone who is investing in a very early stage company. You're investing in an idea. You're investing in a person or group of people who are starting a company
Mhm.
with the idea. And usually when you start as an angel investor, it sounded like you're starting with companies that something about what they're doing, or you know that person in some kind of way. Is that
Yeah. Yeah.
okay?
Usually when angels, they start investing like this, they do invest in people that they know or an industry that they know pretty well. In the beginning, especially was like that because recently angels, they tend to be part of organizations because they saw that instead of just running the risk alone, they could have other angels together with them to dilute the risk and also to exchange some knowledge and do this activity together. So more like a community thing. So has been happening in the past year very much.
Okay. All right. So I know a lot of doctors, I know a lot of professional people who probably know nothing about, like, where do these companies come from? How do I know about them? How can I? None of us knew about Airbnb when it was an idea, right?
Exactly.
Um, so how do we find these kind of things? How does Core Angels help with that kind of things? Just, I'm here. Wow, I really want to be a part of this. How do
Hmm.
I start? What do I do?
Yeah. Yeah. Great. So this was one of my struggles also when I was a mentor on with those startups, and I realized that there was a lack of financial resources to them. I started thinking, well, maybe I could invest in some of these startups. But then I had this problem. I thought about two things, but three things basically. One was exactly what you asked: where will I find these startups? The second thing was, do I have to learn about all the law things that involves an investment in a startup, like all the clauses or which
Yeah.
will be the consequences for me? How much do I get committed to this company?
Yeah.
What are the implications? And the third thing was, okay, then I make my investment in a company. And what happens next? How can I guarantee that I will be updated about the company or participating or in contact with the founders?
Yes.
And this was basically the three questions that I had in my mind. And when I moved to Portugal, so because of that company that I co-founded, I had the opportunity to come to Portugal, and I met a group of people that they were angel investors, but they were doing something different. They were not investing alone. So they were creating these groups of angels that they decided that they had two leaders, two people leading this group. These people, these leaders, they were the ones finding good deals, finding good startups to bring to the angels.
Okay.
But the angels were the ones making the decisions. So
Okay.
this is different from the common venture capital fund structure. In a venture capital fund, besides investing bigger checks and later stages, usually what you have a fund manager that
Mhm.
fundraises money from the investors. And the fund manager is the one making the decisions where to invest.
Yes.
In this angel group, the angels were voting and democratically deciding where to invest or not.
Okay.
The leaders were responsible for bringing those startups. They were also responsible for contracting. So the clauses and term sheets and etc. It was solved by them. So, and also the third struggle that I had was what happens next. They were after, as it was, the startups were invested by this vehicle, this group. We had lots of engagement meetings, not only reports, but also meetings for discussion of the strategy of the startups with the founders. So this dynamics looked very interesting to me. So this is how I decided to start investing with this group
Okay.
in Portugal. And this group was the pilot, was the basics for us to create COREangels.
Okay.
So in COREangels, we have also this philosophy. The angels, they invest together. Right now, we are 11 angel funds in different countries. There is one angel fund in the US. There is a vertical fund. It's focused in mental health, health equity, and mental well-being. And so it's a group of people that is pulling up their capital and deciding where to invest in good startups in this industry. So the angels, they invest around a specific thesis. This is one example, but we have other funds in Europe, in Middle East, in Brazil, in Chile, this one in the US. So each fund has a thesis and each fund has a group of angels investing in this portfolio of startups. And this is also a very good way to reduce risk because, as I said, investing in one startup is risky. But if you are investing in a group of 10, 15, 20 startups, because you are pulling up capital with other people, you reduce your risk also.
Okay, so I have a lot of questions. Okay, so
Sure.
so there's different funds in different countries. And can you invest in countries outside of, if the US fund wants to invest in a startup in Brazil, you can do that?
They can do that. Usually what they do is, it depends a lot on the investment thesis in the end. This fund in the US, they only invest in American startups, okay?
Okay.
But there are other funds like Atlantic. Atlantic is a fund that was built in Portugal, is incorporated in Portugal. We have angels in Europe, in the US, in Asia, and in Brazil. And this fund invests in Brazilian companies expanding to Europe, okay? In this case, the companies are in Brazil, but what happens is that they incorporate in Portugal to receive the funding. And so this is how it happens. So, but we can the fund can invest in companies outside the incorporation country, and it can have angels from outside the country as well.
Okay. So the fund in the US that you said was around mental health and well-being, we said, is there a group of angels in the US that decided that was what their thesis was going to be?
Exactly. What happens is usually the leaders, the people that want to create this fund, usually they are people that have been thinking of creating a venture capital fund, or they have experience as an angel as individually, but they like the proposal of getting together with other people and having the chance of investing in more startups. And in this case, the leaders, they connected with us and said, look, we understand your model. We like it very much. We were thinking about creating a thesis around this thing. And usually what happens is that they participate in a program that we created. There is an acceleration program to create funds. So they plan the fund, they discuss with us and also with the first angels, what are the good characteristics of the fund? Are we going to invest this amount of ticket or less or higher? So more. So and then they launch the fund. This is how it usually happens. So in this case, all the angels investing, they are deciding on startups to invest and then later supporting also the founders, investing in startups related to the theme of mental health and well-being.
Okay. So I could talk for I got a lot of stuff going through my head. Okay. The core framework. Talk about that and how people, you guys are core angels. Is that what the core framework is? What you're just describing?
Yes.
Okay.
Yeah, exactly. We have this framework that is, in the end, every fund has, as I explained, they have their own thesis, okay? And the leaders, they are the ones that are running the show. So they are the ones interacting with the angels, contracting with the startups in their home countries, okay? And that's fine. But we all have this common framework that means that every fund operates in a very similar way.
Got it.
And this is important because in this way, we can, and we have already, angels that are taking part in different funds. We also have startups that have been invested by 2 or 3 different funds when it makes sense to their businesses. And so you can have this network effect. You can leverage the opportunities for angels and for startups.
Okay.
Basically, what we see is that it's all a collective decision. So the angels are the ones making the decision. This is extremely important in our framework. We do have, the other thing is the active involvement of the angels with the startups. So it's not something, this is not for everyone because this is something that it's not just to put your money there and just forget about it.
Right.
Okay? So this is extremely important.
Yeah.
that we can support the founders. So we can invest not just money, but more than that.
Mm-hmm.
And also having a professional leadership, having someone that is taking care of this, promoting this engagement and finding good deals is also something that is part of the framework. So in the end, all of them, they have this way of operating, but they have their particular things according to the country, because we have different legal frameworks,
Right.
different business cultures. So sometimes one thing that works very well for the American fund doesn't work that well for the Middle East fund or for the fund in Italy or in Switzerland. So we need to
Got it.
treat them differently.
Got it. As an angel investor, how long do you expect, like invest whatever amount of money into this fund, how long would I expect my money to be out there and not have a return?
Okay.
Or would I
Anyone,
get a return?
5 years, just forget about the money. Okay.
Okay.
Don't wait to have the money back or parts of the money back in 5 years. If it happens, great. This is what we call an early exit. Okay. If it happens, great, but usually it's not like that.
Yeah.
And this is a patience game. So the most patient that we can be, the better our returns in the future. So many researchers, they show that very good exits, they come after 6-7 years. So this is a good time frame,
Okay.
but not less than 5.
And okay, so this is not a cash flowing kind of asset. This is diversifying. This is money that you're putting out there in the world that
Exactly.
one day may or may not come back to me, because you're very early investing in a thing. So you're not going to put
Mm-hmm.
a bunch of money into one
No.
company. You want to spread it
No way.
across.
Yeah. And the thing is, what we usually advise people is that don't put more than 10% of your wealth in startups. Okay. So as no one recommends, well, of course that it varies a lot with the profile of the investor and also the experience and etc.
Yeah.
But it's not recommended, especially if you're starting, that you should not put more than 10%. Some people say 5%. But when I started investing in a startup, what I did was I'm not taking the money out of real estate or fixed income applications. I'm taking the money out of the stock market, out of my higher risk assets in the stock market. This is where the money is coming from. And I'm just reallocating my high risk money. So the part of my wallet that is dedicated to high risk, I'm just reallocating it to investing in startups.
Diversifying your high risk or your high
Exactly.
risk. Oh, got you.
That's it.
Got you. This is really exciting to me, because not only are you putting money to work, you are also having a chance to help someone develop their company. And that's pretty
Absolutely.
exciting. That's pretty exciting.
Yeah.
What percentage of startups fail?
What percentage of startups fail? Usually we have this in the early stage, we have this 9 out of 10 fail, 1 out of 10 succeed in the whole world of startups. There is a very interesting research conducted in the US and in the UK that says that usually you have 50% of startups, of your portfolio of startups, will close, will shut down. You'll get no money out of it. You'll lose money, actually. And then you have a distribution that goes along. You get a multiple between 1 and 5 times, multiple between 5 and 10, or even 30 times. And then you would have 5% would be 30 times, which is impressive. If you think that you're multiplying by 30 your money in 5-7 years, this is crazy in one startup.
Yeah.
And of course, when you compound the portfolio, this money can be something between 3 to 5 times. Okay. But still, and it's a very good return.
Yeah.
This is what the researchers have shown until now.
Yes. And we can't forget that we're helping a company to develop. It is, yes, you're putting your money in there and you're looking for that return, but you have you have something to give besides just your money to these companies. And that's to me, the money with mission part. You're helping to make something better. And that's really exciting to me. It's really,
yeah. And what we see is that this is why angel investing is so interesting. So I'm so passionate about it, because there are many motivations for angels to invest. Okay. So some of them, they are more financial oriented. Okay. I want to help the founders, but I'm really looking at the future of maybe multiplying my money by 10 or whatever. But if it's just for the money, people are not going to invest in a startup because it's too risky, right?
It's very risky. Exactly.
So there is a lot of other factors involved. One of the factors is networking, getting to know interesting people, like-minded people, getting to know people that are interested about the same things that you are, technology, innovation, etc. The other motivation is helping the future leaders. So I'm experienced. I have my gray hair. I have been learning a lot. What am I going to do with that? It's just to sell my knowledge to a company. Don't I have things to share with these new leaders, with these people that are trying to come up with something new and to improve the lives of people, etc.? So there is also this motivation. And there is another motivation that is learning. And when you are in a group, it's even better because when you are participating in a community that is fostering innovation, that is helping founders, you learn so much from a single meeting because you're learning from that startup, but you're also learning from your angel colleague that is making some questions that you have never thought of. And then later you can discuss. So learning is also another very, very important motivation to angels as well.
Yeah. This is so exciting. So to me, when you were talking, I was thinking about legacy. What legacy are you looking to leave? And if to me, our legacy should be so much bigger than just us, even bigger than our families, is what are you leaving for the world? Because
to the
we
world.
all, I believe, want to leave the world better. And what better way than to help develop future leaders, future products, future things that are going to help the world to be a better place. So this is a huge legacy thing to me. I'm interested. How do I start? How do I get in? What do I do next? What's next?
Okay. That's a great question. Yeah, well, if anyone that is listening to us or yourself, even better, if you're interested in knowing more about COREangels, you can go to the website and look for the funds that we have. Right now, as I said, we are 11 funds. We are creating 5 more until the end of this year or first quarter of next year. There are funds. We have this fund focused in mental well-being in the US. We also have another fund that is being planned that is also around health, but I cannot disclose more, but you can contact me also if you are interested in that directly in LinkedIn, Cintia Mano in LinkedIn. I can share my profile later, but also contacting through the website, it works. Usually there are people that they like the model, they like what we are doing, they connect us through the website. We talk to them, we have a first conversation to understand what they're looking for, and then we can direct them to our fund leaders that will make a more specific conversation about the fund itself.
And is there a place where I can be educated on being an angel and what all that would mean and what I'm expected to do and what's expected of me and how I'm supposed to interact and participate?
Yeah.
Is there that education available?
We have some webinars that we conduct every month in our community. Some of them are open to the public. So in our website also there is a tab about the webinars, and people from outside, they can register as well and participate. And we are launching for the fourth quarter this year. We are launching a series of trainings. They will be very short trainings, like pills that we call, to answer specific questions about angel investing from the beginning, like what is angel investing? What are the consequences? How do I participate? Until things that are more technical stuff, like how do I make evaluation of a company, or what are the metrics, or what are all those acronyms in the startup world that I don't know anything about and I should, or I feel like I should. So this sort of thing. So we are launching this in the end of the year, hopefully, and just to cover this need, because this is something that our angels have been asking about, although we had a lot of learning by doing, but it's good to compile the knowledge in some content and share with them all.
Yeah, because I can just hear all the docs out there and all the A student people who want to read about it and understand it and do all this stuff before I even launch in. It's like,
exactly. And the dynamics is different. Sometimes you get someone that is coming from corporate or a very technical career, and they look at a startup valuation and they think, oh, wait, how do you think that this company is valuing like $10 million or $100 million? Because it's a different mindset. It's a different way of assessing value. So It's important. We
Yes.
understand that this is very important.
I love it all. How can people get in touch with you? We'll say these things out loud, you guys, and I know everybody's doing something other than sitting, listening, or watching with a pen. So all of it's going to be in the show notes, but let's just put it out there for anybody who might be sitting and writing and wants to know right now how they can get in touch.
Okay, great. So www.coreangels.com. This is our website. And Cintia, Mano, and LinkedIn is very easy to find me. You can connect me there also.
Okay. So core is like Apple Core, CORE. Cintia, CINTIA. Mano, hand, MANO.
Perfect. That's it.
Got it. That's the
Thank you.
LinkedIn. And then we'll have all of this, I promise, in the show notes. But I can imagine diversifying your portfolio, taking some of your money, like Cintia said, your high risk money that you've got in the stock market, even if you're not seeing the stock market as high risk, start seeing the stock market as high risk. And think about diversifying into some other things like angel investing. And just, if nothing else, you get to learn more about angel investing. You get to be involved with some people that you wouldn't necessarily be involved with and hear. So this is expanding your network. You never know where you go once you expand your network. That's a big thing for me. I just like, oh, of course I want to do that. I want to be in a room, whether it's a Zoom room or an in-life room, with people who are thinking about improving the world, making money, and not just about themselves. So it's about something much bigger than ourselves and leaving that legacy to the world. Cintia, this was really, really fun. Really fun.
Thank you. I found it too. I really appreciate
so much. And we definitely have to stay in touch because one day I'm going to be in Portugal. And we're gonna,
oh, yes. Let me know. I'll be here for you. Just let me know. It'll be a pleasure
so much
to
fun.
meet you
This
here.
is so good. I'm going to go and check out some things and really get to know more about Core Angels and angel investing and get more into that. This is a good thing. You guys check it out. Okay. Expand your world. Get out of your comfort zone a little bit. Go slowly. I know it's scary, but go slowly. You can do it. See you next week.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.